Russell is up. Love to see the Russell up. Russell up is like, if you wake up and the Russell's up, usually give it a 75% chance you're going to have a good day. There's got to be some correlation there. If the Russell is up, most people probably have a good day. That's my guess. The reason I say that is because the Russell is the small cap companies in the United States index. You know, everybody focuses so heavily on the S&P 500 and the NASDAQ, like the winner's circle of stocks, right? But the Russell is still companies that are making money. Don't get me wrong. Not all of them, but you know, a lot of them are companies that are doing well overall, but they are the ones that are up and coming. These are your underdog companies. And it's one of the reasons I really like the Russells, because during good periods of time in the US economy, the Russell experiences ginormous growth. That being said, people like to, the S&P 500, these companies have sort of almost become like the safe haven sort of areas, which is a weird thing to say because nothing about stocks is safe. I want to make sure I make that clear. But in terms of which, if you had to be in stocks, the safer ones are going to be your ginormous companies that have consistent, growth and proven, business models and all that. The reason I'm getting at with this is that I actually think that in 2025, you might see the Russell start to make a serious move. You might say, well, Nick, it's up. But yes, just look at this for a second. Here's the Russell over the last few years. I've made this point 700 times on my channel, but here's the S&P during those same years. So Russell sideways, S&P up and away. So when we look at the comparison of those two, why is the Russell still not seeing the same kind of burst in energy? Well, it's because interest rates have not really come down. They've come down a little bit, and expectations are for rates to come down overall, but you have to be careful with that assumption. I think that we live in a world right now where everybody is fully expecting interest rates to come flying down. And the tricky thing for me with that is that interest rates might not come flying down. Like, interest rates might stay where they are. As crazy as it may sound, interest rates don't have to do anything. They could go sideways, they could go up, they could go down. What is going to determine that? Well, the state of the economy, but one upward pressure on interest rates. Let me just say this. One upward pressure on interest rates that we've all got to deal with. Anybody know what it is? Why should interest rates have some sort of floor to them? Well, it's because the US government borrows a ton of money. To issue new debt, they have to make it enticing. And with the US government so piled on with debt, it's one of those things. You have to be aware that high amounts of debt is a risk to people who want to lend you money. I'm looking for some setups. I've got a watch list here. Let's do our standard protocol here. I'm going to take out minor currency pairs. Okay, we got Euro USD, possible bearish setups, dollar CAD, still bullish. So going to look at this on the currency front. S&P, I'm looking for dips. NASDAQ looking for dips. Bitcoin looking for dips. Dow looking for dips. Nikkei, DAX, FTSE. All of those are possible candidates. Pretty risk on right now in the Edge Finder, except for the dollar bullish ideas. But the dollar bullish ideas I don't hate from a risk on perspective because the dollar is up recently on good US economic data. Take a look at the dollar here this morning, down a little bit on the 15-minute chart, but pulling back from, we discussed this yesterday. I actually thought we would tap out around this area, 104, before we saw maybe some pullback. But if you get a couple days down on the dollar, I'm going to look at that as an opportunity. Personally, I'll be watching things like Euro USD. I mentioned that earlier. Euro dollar on a possible short setup. If we get a retracement on this, I'm very interested. Though I do think that on a technical perspective, we're a bit overextended right now. So I would be waiting for a proper pullback here before taking a position. And part of this too, guys, is I would need, at the time of this pullback, I need to double check that the Edge Finder still gives me that confirmation signal of a -6. And then I like that setup. That's a decent one for me. Euro dollar, possible bearish setup. Dollar CAD. Let's take a look at USD CAD really quick. Here's the Canadian dollar. So the CAD's been really weak. Dollar's been really strong. So if you get a pullback here, I like this for a possible setup as well.
Market analysis, free trading courses, edge finder data, and special offers. What do these things all have in common? They're all available for you right now inside of our free Discord. You can click the link down in the description below to join the free Discord today and get access to all of this and more. Stay up to date with all the latest trading information and A1 content. And if you want to upgrade to our Gold VIP Discord that features every single trade that Trader Nick and our other professional analysts take, you can find the links for that in the description as well. So don't wait, go check out the free Discord today.
Pound USD was bullish at one point, but recently pound inflation, or the UK's inflation, came in at 1.7% inflation, guys. So what does that tell you? So if UK inflation is at 1.7 year over year, that tells you that the Bank of England better get their scissors out, right? Oh man, I really need a scissor sound effect, James. That'd be a good one. I got my hold on. Let me get my soundboard turned on. Gotta unmute myself here. Oh, sorry, Chandler. Psyched you out. You gotta get the soundboard. You gotta get some scissors. That'd be funny for rate cuts, right? Because the Bank of England's probably going to cut rates. If you've got, and that's what the market's telling you here, right? Market sold the pound on that news. This was CPI report that came out for UK, 1.7 compared to 1.9, I believe. So forecast was 1.9. Actual came in at 1.7. That's really quite low inflation. Remember, the pound was at like 10%. The UK was in like a 10% inflation situation. Complete reversal on inflation. But where you have to you have to be careful is that the UK's drop in inflation, is that because the economy there is really struggling too? That's the other question. A large component to UK inflation, though, is good old oil, right? Oil and energy costs were crippling to Europe and to the UK with the whole Russia and Ukraine situation, right? So with oil coming down here, that's a good thing for inflation, the story of that. So we'll keep an eye on oil. That's really, really important. Apparently, there was some news out of the Middle East. A Hamas leader apparently is no longer. I could be wrong. I just heard that briefly this morning. Frank mentioned it to me. Why would that drop oil prices? Well, because if there is in any way de-escalation whatsoever, that's going to be bearish for oil. And if there's any escalation in the Middle East, Ukraine, etc., anything that could threaten the supply of oil globally, it will cause the price to go up, right? Thoughts on US 30? Yeah, so I like the Dow. I like the NASDAQ. I like the S&P. I like all the indices long. I don't like them short. But Dow is too far away for me to take an entry. So nothing to do here. Love the chart. Beautiful. Keep going. Uptrend. Love it. But can't enter it. NASDAQ, I don't have a position on, but I do have a position on a large component of it, the SMH, which is an ETF that tracks semiconductors. These are your NVIDIAs, your Taiwan Semiconductor, which popped recently. This big jump was because Taiwan Semi, a very notorious, Taiwanese semiconductor manufacturing company, had really good earnings and projections. And that's what you want to see in the semiconductor world. These things are very expensively priced, and we all know that, but they're expensively priced because there's a huge demand for chips, right? Semiconductors. So semiconductors have been a really dramatic area of the market recently. But I added to my position recently with the news. So I'll tell you this. I don't usually make big decisions based on news articles or headlines or whatever, but sometimes I will use them to add to positions that I like. So semiconductors, let's do something. It's Friday, and I want to show you guys something. can I show you guys something? Let me see. Okay. So I'm going to show you something that is not publicly accessible yet. I'm just going to show you a little bit of it. Don't let me leak it. This is something that we're working on behind the scenes. I'm holding it so that I don't accidentally show too much of it. The bottom left hand of your screen, you can see SMH, semiconductors. This at one point was a like +5 or a +6 on this chart that I'm showing you, which is the top sectors and ETFs page. It is not the Edge Finder. It is something that we've got coming. If you are somebody who trades stocks, options, or ETFs, I am not going to say anything else about this tool at this time because I will get in trouble with marketing. Julie will hit me. No, she won't. She's very nice sometimes. But if you would like some early information about what I just showed you, it is top secret. It is not the Edge Finder. It is something that we are working on for stocks, options, and ETFs, which I trade very heavily myself. If you'd like to get some information about that or see the latest on that, please join us in our private Telegram channel, specifically for stocks and options. Anyways, gold is topping the charts here today, guys. Gold is taking no breaks in absolutely ripping this year. Look at this. I mean, this was like, the gold is so aggressively bullish right now that's like the kind of pullbacks that you're getting this year as like a maximum. Like that. Let me look at the pullback here. This is a pullback on the price of gold of 3%. And that's like generous this year. Let's take a look. Pullback over here was 2%. Pullback over here, 2%. Pullback over here was pretty big, 5%. So you got 5% pullback. Pullbacks here, 3%, 3%, 4%. Max from there was 6. So like you're telling me this year, the biggest pullback you've gotten was a 6% drop in the price of gold. Gold is taking absolutely no prisoners. This is gold right now, okay? That is gold this year. Like gold is a monster. It is a samurai clad in armor defeating its opponents in For Honor. I've never played For Honor, but those like sequences in that game are like so cool looking. I see them on the internet sometimes. If you don't know what I'm talking about, like when I've never played this game and I'm not a huge gamer, but like when you defeat an opponent in For Honor, they do like some like outro sequence of like, you know, the it's like Mortal Kombat. Think of like the old Mortal Kombat games, but this one is like super high definition, cool looking. But you can play as like the samurai dude. Every time I hear this song, I think of the guy in the game. He's like, it's cool. That game will make you mad, says our producer. It looks like a game that would make me mad, but it looks cool to watch. That, you know, there's like a bunch of these games that I have never played, but I like watching. Like what's the other one? Like Dark Souls. I've never played Dark Souls myself. I've never owned the game, but I do like to watch it. It's fun. You know, my game is Age of Empires. I am a lifer on Age of Empires. I played 2, I played 3, and now I play 4. And if anybody here plays Age of Empires 4, I was Conqueror at one point. If you know what that means, it's a rank. It's like silver. It goes silver, gold, platinum, diamond, and Conqueror is the highest rank. So sometimes when I have a rough day at work, I just go play Age of Empires angrily. But it's Conqueror 1. If you've ever played it, it's like the lowest of the like there's like silver 1, 2, 3, gold 1, 2, 3, diamond 1, 2, 3. I was Conqueror 1 for like a split second, got my butt handed to me and got whipped back down to platinum. What's that game about? You can look it up. It's like a real-time strategy game. It's pretty nerdy, but I've played it like my whole life, even like when I was a kid with my cousins and stuff. So I've just always played it. Anyways, gold taking no prisoners, man. It just keeps going and going. So what do you do with gold trading at all-time highs? A lot of people, they trade gold solely. A lot of people love to just trade gold. That is all they trade. They trade gold and that's it. The difficulty is when you're at all-time highs, what do? Are you selling this rally to your own peril? Because if you've been a seller of gold this year, you have been banging your head against a wall. Do you buy it? Well, you can't chase, right? This is a sort of environment where I like that I trade many different things because I can't trade all-time highs. There's nothing for me to do. I'm not going to short strength, and I'm not going to buy at the highs because, again, I've got to wait for good pullbacks. Now, if I'm looking at gold on the 4-hour chart and I've got this previous all-time high that broke out, it's the simplest thing in the world. I've got to wait for the 38.2% retracement to pull back, and I've got to wait for confirmation from the edge finder. Those two things, I'm in the trade. One of those things missing, not in the trade. Not going to touch it. Why is Edgefinder not showing bullish readings for gold right now? Let's look into it. What we can do is we can go to the data scanners page. We've built one specifically for gold and silver. Here is why gold is not favored on the Edgefinder right now. Even though the market's ripping to new highs, which I think is partially due to the elections, some uncertainties there, and expectations that no matter who becomes a president, there's going to be a lot of money printing. And, here's another thing that is we've got to talk about in just a second is the markets seem to be now forecasting Trump to win. And again, I'm not here telling you, I'm not saying like whether I think that that's what's going to happen or what I want to happen, but the markets are saying some things that we need to discuss. Gold going up, we know Trump is a very wildly, opinionated person, whether you agree with him or disagree with him. That's not what this is about. He's an uncertainty. He's a big question mark. And so gold thrives on that. So evidence number one, gold is up. Evidence number two, yields are up. Trump's a money printing spender. He spends some money, right? Whether you agree with it or disagree with how and what he spends money on, he spent a lot of money in his campaign, right? Or in his administration. So yields are going up because maybe people think that, hey, we're going to see some inflation maybe come back. Maybe the tariffs are under question. I'm not here to debate these things. I know people have their opinions on these. I'm not telling you whether I think they're right or wrong. I'm simply telling you the market may think that could be inflationary, and that's why yields are up, right? Gold is up because maybe there's some uncertainty about if Trump gets elected, or maybe there's some uncertainty of who becomes president at all. The other thing is you could look at his ETF, DJT. This thing has been going up. It follows the betting market pretty close. When things are swinging back in favor of Kamala Harris, I've watched this, the last few months. DJT goes down. When things are swinging in his favor, DJT goes up.
Nice, man. Up like I think I'm up close to $675 on the week for some strangles. Netflix should be another $250, and did some work on Baidu. Got a new fresh high up about $19,000 on the day. P&L is looking pretty good. So I took a look at China stuff. I want to get to gold and silver. What are you liking, Frank? I said this yesterday on the show. I'm like, hey man, gold's running away from you.
It is.
Yep.
It is running away. Should have bought at the highs. I'm not buying gold.
I'm not either.
I took a bull put spread. I took two actually. One is on ASML.
ASML. So you got into the giant dump.
Yeah.
Of ASML. Okay. So what'd you do? Just a bull put spread?
Yeah, I got it at 680 is where I sold, and then 675 is where I bought the put. So as long as it stays above 680, it'll be fine.
Nice.
That's 21 days out.
Okay. That's good. Yeah, I mean that was a bit. I don't know if it's an overreaction. If this is a fake out. If I pull up, let me pull up this. This is the only thing I didn't love is that we are getting some crossovers on the moving averages. So if this was like pulling back to the dip, I would have been more inclined to actually take that credit spread. But I looked at a 111 on this because the IVs jumped up quite a bit. But I don't know, man. I mean, if this does a pullback like that, that's probably good enough for you to get your profit. Part of me hopes this actually goes down a little bit lower, and I'd like to maybe participate in like the 600 to 450 area. That's wishful thinking, but whatever. I don't know. I might just trade NVIDIA as opposed to ASML, but I like the trade, dude. I like the trade a lot.
Cool. I got one more. This one's pretty risky.
Okay.
It's a bull put spread on the SPX,
Bull
but
put
it
on
was
SPX.
just below open.
For today?
Stab. Yeah, it's so SPX. That open price was 58.60. I got mine at 58.55. So if it closes flat or higher, it'll be fine. But this is what I'm hoping for an update. But the fact that we have not really moved, like we're still in the range of the first 5
candle. The first candle. I know.
So I've seen this before. When it stays in this range for too long, it could sell off in the afternoon, become like a 30-point move to the downside.
Mm-hmm.
And then by then it's too late to come back. But I don't know. I've just been seeing. Yesterday I didn't like the trade, so I didn't put a bull put spread down, and I'm happy I didn't do this because that would have been a mistake. Today I'm hoping that the range will kind of be. It'll be a minimal range.
Mm-hmm.
It won't be as crazy because we have earnings. But Netflix was strong.
Yep.
China's rebounding.
Yep.
I think there's more demand out there now. So hopefully Friday won't just be another sell-off. But yeah, that's what I'm looking at.
We'll see. Let me take a look at China here. So HSI, that's a big rip from that 50%. This is good. This is good to see, like versus just giving it all back. So HSI had a very strong pop today, showing there could be some resiliency in that China stuff. China's wind turbine makers call for an end to price war. ADR surge on central bank measures to boost market. Now we're talking animal spirits. Let's go, baby. Surge in pre-market trading after China's central bank on Friday kicked off funding schemes and urged swift adoption of policies to support capital markets. Do it for like 3 months. That's all I need. Let's see here. Initially pump up as much as 800 billion won or $112 billion in the stock market through newly created monetary policy tools. Perfect. All right, I'm going to take a quick photo of this, and this will be good to share. So yeah, thank you, China. Everybody says that, right? I mean, you should. You buy everything from them, so.
That's true.
Anyway, so I like it. We'll see if there's some follow through there. That's the most important thing. Alibaba gapped higher. It is fading a little bit, but we're still up 1.66%. Baidu off the 70% pullback. The one thing, so 70%, kind of the anatomy of a wedge. That's something I've learned over the years is if we have a low and a high, we pull back 70%. A lot of times it looks like this. And it gets narrower, and then the market has to make a decision. I'm hoping that from carving out this low, that the decision is we get another, follow through to the upside. So we'll see. I'm still holding shares of Baidu and Alibaba. I am in FXI with some credit spreads. Nothing crazy there. Did I take profit on this? Let me check. I think I took some profit in FXI, but let me see. FXI. So I have the 30 by 30. So the 30.50 by 30 trading for 12 cents. I think I'm going to take profit here, Frank. I know this is early, but I've got 10 contracts in. I'm not going to own 1,000 shares of this. I am currently up around 150 bucks. I think I'm just going to take the profit. And then I've got a 31 by 30 for December. This one's up about 80 bucks. I'm okay lightening that load and exposure. I know this is out far enough that if FXI does actually go higher, that, my debit. So I got in for I think I got in 27 cents on the 50-cent spread. And then if I did $1, I got in for like 45 or 50 cents. Let me verify that. Make sure I'm not sniffing glue over here. So the 31 by 30 for 5 contracts. Let me go into my trade history. Trade history, FXI. And let's go to the last 60 days. So my 31 by 30, 214 and $1.50. So that was 5 and 5. Okay, so 214 and $1.57. Let me do the math there. So 2.14 minus 1.57. So I got 57 cents. And right now, that is trading for 40 cents. I'm going to let that one go a little bit longer timeline wise. But the 10 contract one, that should have been 30.50 by 30 for December 31st. I think that one's down from like 27 cents down to 12 cents. If I can close it at 12, actually, I think I'm going to let it go over the weekend, give me a little bit more time. I'll look to close that one out maybe on Monday. So if I do the same thing here, my 30.5 and my 30, so it is 27 cents, and right now it is showing 15. All right, so I want it to be under 10 cents. If I'm going to close it, I'll make it under 10 cents. Also, there's a little bit of wiggle room here. I mean, we're trading at like 32.18. I'm out of the way. I just want to see if price stays here, goes over the weekend. If this gets less than 10 cents, I know it's not a big deal, but making 17 cents a contract on 1,000 shares, or 10 contracts, I'll make $170. So whatever, I'll try to grab a few bucks out of that. But yeah, China's looking pretty good, looking better.
Do you think the 6,000 price target for the S&P is still possible by the end of the year?
I do. Yeah, I do. I think the market is. Look, I think we're gonna get like a nasty. We'll get like a nasty dip or a week, like something like this. Not like a August 5th type event, but I think we could have something along the lines of like a, this was that Labor Day sell-off that seemed a little nasty. I could see the same thing around like election week. Maybe there's enough volatility there. If maybe we have a bad week in earnings, maybe Mag 7 disappoints and it drags the market lower. I don't know, but something that maybe just the market's like. I'm trying to think of an analogy. It's like the market essentially is in like euphoria. Nothing can stop it. I mean, 1% pullbacks or pauses is like everyone's just buying everything. The soft landing scenario / no landing scenario, it's like everyone's on board with it. I do think there's a lot of greed in this. I do think it's a bit, frothy. I think it's a bit over its skis, but it's like this market has a lot of momentum going to it. Path of least resistance is the upside. As we keep saying, if price isn't proving or confirming that it's doing any type of damage, all this is okay, we have previous highs, that's now support. Okay, we have previous highs, that's support. So if we have any pullbacks and dips, I'm just going to look to see if those dips get bought. And I'll be, patiently waiting and see if I get something to offer it. If not, the overall portfolio melts up. I'm probably not doing a lot of extra buying at these levels outside of the kind of the short-term income stuff that I do now. But for the most part, positions are up. P&L is pretty solid for the year, and I'm going to see if that will kind of continue to coast. Silver hasn't hit my targets yet. Gold is just running, and I think gold is still fine to stay in. My futures trades are still running with full expirations. Silver, if it gets me profit, that's still a nice little chunk. And then Bitcoin potentially could be like this little hidden bull market that we might see by the end of the year into Q1. So that is kind of the extra juice to my portfolio by the end of the year if things just kind of stay looking good. So I don't think I have to take a bunch of new trades at these highs, because I'd like to obviously buy some dips and pullbacks and see if we have some opportunity to get some discounts. But maybe we don't, and that's okay because I'm still invested. I'm still positioned. If we melt up higher, 6,000 is doable. And I don't know if this chart is perfectly analyzed or not, but it makes some sense to me that this high, we get up into this area. That's the spot that I get a little bit nervous. Right, we get up into 6,000 as the market to say, okay, congratulations, milestone achieved, and then bye, bye Felicia, maybe 5%, 10%, who knows?
I think every time we hit an all-time high,
within
a couple of days they'll probably pull back some, but I don't know how big a correction will be.
Sure.
So yeah, that's why I say limited upside in the short term, but I guess in the long term we'll hit that target. Just won't necessarily be a super euphoric move.
Agree.
Just a giant green candle. I think we'll just see like a slow chug, like we've been saying.
Yeah.
So that's why I want to do these spreads, and hopefully be able to contain price and continue to do so, to today is looking uncertain though. We're at 58.56.
Yep.
So
And,
really
and your sell put is 58.55.
yeah,
Dude, gutsy play cotton. What'd you collect on that?
250. So
Okay, it's a 1-for-1 then.
1-to-1.
Yep. All right, man.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.